So Tesla is going to have their stock split very, very soon. 25th of this month, almost 24 hours left in the stock split. But what actually is a stock split and how it's going to affect you? So if you like to know about what a stock split is and how it's going to affect the average investor, watch this video till the end. So a stock split is a corporate action taken by companies that have seen their share prices increase to levels that are too high. So in order to reduce their share price, they do a stock split. But why do stock splits? What's the primary motive? The primary motive is to make the shares more affordable to small investors. So at the moment, the Tesla stock value is $889 per share, $889 per share, roughly like $900. So by doing a stock split, the primary motive is that the share are become more affordable. Tesla is doing a 3-for-1 stock split. So for every one Tesla share that you own, you then get additional 2 shares. So the underlying value of the company is not going to change. The market capitalization of the company is going to remain the same. But Tesla is doing this stock split based on what they have said is just to make it more accessible to our broader base of investors. So they want to welcome new investors, and that's why they're doing this stock split. But what does this stock split means to investor? Now we're going to look into the detail about what actually it means. So here you can see this picture, and you can see here that pre-split, if you own, let's say, 1 share, then after the split, post-split, you're going to have your shares multiplied by 3. So if you own 1 share previously before the pre-split, now you're going to have 3 shares. This is what has been said here. If you own 100 shares, let's just consider another example. After the split, you are going to have 300 shares. But when you have 1 share, the market price of per share of the Tesla, like at the moment, is $900. Let's assume $900. So this means that after the stock split, you're gonna get 3 shares. It's a 3-for-1 stock split, So now your $900 stock is going to be divided by 3. So after the post split, this is the amount that's going to be per share. So this is going to be $300 per share. And now you will own 3 stocks, 3 Tesla stocks instead of 1. So your dollar value remains the same. If you're just wondering about, we're gonna get 2 free stocks, so you're getting very happy, just relax, because your dollar value just remains the same. However, you're gonna get additional shares, 2 additional shares, but your dollar value remains the same. You can see this formula over here if you just like to check more about it. So now your every share is worth less than its previous value. You own more stocks, the dollar value has been divided. So if you own 3 stocks, $900 divided by 3, that's $300 each stock value. Pretty simple. Now let's talk about, is a stock split a good or a bad sign? Now there are 2 general perspectives about either if it's good or not. First, we're going to talk about if it's a bullish sign. So some consider it as a bullish sign because before the split, the company valuation has got so high that an average investor can't buy the stock. In the Tesla stock, we can see clearly that it's almost $900. So yeah, most of the average investors can't even afford to own even 1 single stock. So for that, it's actually beneficial because the investors that don't have a lot of money, and they still want to own a Tesla stock, they can't own it. But after the split, 3-for-1 split, your $900 stock is now worth about $300 each. So it's pretty much affordable for if you just look into the investor side. So technically, this is a bullish sign. Also, stock splits can help improve the trading liquidity. And as the stocks seem more affordable to people, hence more people put more money into it. Hence the company grows altogether. Now let's talk about the bad sign of the stock split. Now usually stock splits happen. This is one scenario when companies are struggling financially. So they artificially inflate the stock price in order to make their investors seems like they're going up and up and up. So of course that's not a good thing. Usually companies on the verge of bankruptcy does a reverse stock split, but this is not a reverse stock split. This is just a simple stock split. It's actually not as bad as it seems. So in simple words, you can consider it's not as bad as you think for investors. Now talk about what's going to happen after the split? The price is going to go up, or what's going to happen? Does usually stocks go up after a split? Well, listen, the price has nothing to do with the split, because an intrinsic value, that's the real value of the stock, that is not changed by a split. If the price is going up or down, that is based on the investors' excitement or based on the investors' fear. So if a price has been going up, this means that investors is excited. Maybe they liked this split idea from the company, so the price is just temporarily going up. Or maybe there are some investors that are not happy from the split, so for the time being the stock can crash. Hence, overall it doesn't affect on the fundamentals of the company. So saying what's going to happen about that the stock is going to go up or down, you just can't say it, because there's a mixed mindset about it. Some people think stock split is a good thing. Some think there was just no need for a stock split and just inflating the price and giving us more shares, making it more complicated. Market capitalization remains the same, or dollar value remains the same. So there's a side that doesn't like. I'm actually not a big fan of stock split either, but I think in Tesla cases, I think Tesla is criminally underrated based on what they're doing, based on how they're growing. So I think in Tesla case, it's going to be fine. We're not going to see some big negativity and FUD regarding the stock. So yeah, let's just see. And what am I going to do? I'm going to buy a stock, Tesla stock, before it or not? Well, I'm gonna wait. I'm not gonna buy now, and because I just want to see how it goes, and I just can't take so much risk at this moment because there is literally no idea where the stock is going to be. Trading at $900 now, and we can see this thing trade at $300 in almost 24 hours. You don't know, it just fell from the $300 new price, post-bid price, or it can maybe go up because of the investors' excitement. But I'm just gonna wait on and see how it goes overall. And secondly, I just don't own stocks the way like usually people do. Based on where I'm living, it's very difficult to create a stock brokerage account. So I usually trade the contracts on different forex brokers. But I will see how it goes, and I will just open a futures position on Tesla and see where it goes. Overall, I think the fundamentals of Tesla are really, really good, and I think Tesla is going to be here in the next 5 years, maybe even next 10 years. So yeah, I think it's not that big of a risk. Yeah, so far, after the split there will be some more volatility, but after some days pass, we are going to see normal volatility back to its normal days. So hopefully this video has helped you about the stock split. I just thought this topic is really interesting, and many investors need to know in a little detail about what is a stock split and how it's going to affect them. So I just created a video. It's been months since I uploaded the video, but I think I'm trying my best to be very active once again. Make sure to subscribe. I will see you in the next video. Bye bye.